Mhm. All right. Everybody can hear me, see me okay? Thumbs up
Yes, sir.
if you're on camera. Okay. I saw nobody put their thumbs up, but I heard someone say yes, sir. I need to know if everyone can hear me and see me okay. If you can hear
Yes.
me and you're on camera, just put your
Yes.
thumbs up because I can see
Yes.
you.
Yes.
Thank you for who's saying yes, but no one
Yes.
putting their thumbs up. So I'm not sure if anybody can actually hear me. Okay, thank you.
Oh, yeah.
Thank you guys. All right, appreciate you. And the reason why I'm doing that is because I'm switching mics, and some people might be able to, and some might not. But it looks like everybody can. They just think everyone else did it. All right, it's all good. Got to get to it. All right, exciting stuff going on. Oh, I see all the thumbs up in the chat. That's why I didn't see it because I was looking for you to visually do it on camera. Sorry about that, guys. All right. All right. Hopefully you can see my screen okay. Interesting stuff about to happen here, guys. This is the moment of truth. So what I'm going to do is I am going to get rid of all of these drawings because I don't like yellow anymore. And I'm going to redraw them. All right, so right here is the 112. Let's go with red. That is the major support and resistance level that we've been having a little conflict with. Previous all-time high, resistance, broke through, retested, all-time high. So we had an all-time high here of 123, and then another one at 124.5 here, where we just wicked above it and then came back below it. We never held above. Technically speaking, that's a double top. Very similar to back here when we were at 108, 109. I know I go over this a lot, guys, when we get on these calls, but I wanted to like sink in so that you really know what you're looking at here. So here we came up and hit 108, and then we double topped at 109 before having the big fall. And this, let me just go to a little bit of a higher time frame. This was the giant falling wedge after that happened right here. And I want to show you something that is going to be easy for you guys to do or to pay attention to without even knowing much about what's really happening, because this is something that only happens twice a year, about every 6 months, and it's happening right now. So here I had obviously what looked like a little bull flag here. I'm going to change this to purple. I had a little bull flag. We broke to the downside here, which was interesting. And all we did was retest the 112, created a W, and then pumped up, and then broke out of the top right here to make a new all-time high. But we came back down into this original bull flag, retested, came through it, retested it as resistance, dropped all the way back down to retest the 112 again, and then came right back up to the top and retested that channel again. So interestingly enough, depending on where you put this, could be if you want to touch all of the, let me just zoom out so you can see it. If we want to touch all of these wicks, because these wicked above but never held, wick, touch, touch, wicked above, didn't hold, touch, 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 possibly right to here and here. And then support, support, breakthrough, resistance, resistance. And if you just keep bringing this down, we basically popped up to the top of this. Where's this one? This one's probably right here. Now, normally people are not doing this. This is not normal to extend an old bull flag this long, but I just want to show you how sometimes when we break out of a flag, break out of it temporarily, we come back into it and we're back into the same resistance zone. And you can see where we hit it and then hit it and then broke out. And you can see where we hit it as support here. What used to be resistance, we hit as support. So obviously it's still in play to me. And then when we go through it here, and then we come back up and retest it here, obviously that line is still real to me. And then we come down here and hit it here, and then hit it again here, and then come back up and hit it here. Obviously, this is still valid to me. And then here we break below it and we come back up and retest it, break above it, retest it, break below it, and retest it. And when I say retest, I mean, look at that wick right up to it. It's still valid to me still. And then, so I just keep bringing it out. It's still valid until it's not valid. But that's just one thing. Now we got this line here, which is the 112, major resistance, resistance, support, support, resistance, resistance, resistance. We broke above it. And then the other day, I was telling you guys that we have a potential EMA ribbon. We flipped bearish on the EMA ribbon on the daily, and we've been below it. And we do need to get above the 113.5 and hold on the daily in order for this to be invalidated. Otherwise, it could continue down further. That's all true. And we're still kind of in that situation right now. Hold on one sec. So here's what I want to show you. We have on the weekly time zone, we do have a interesting thing happening, which only happens twice a year, every 6 months. I'm going to go to the RSI, stochastic RSI, down here at the bottom. Every single time we have a blue line cross the orange line to the upside, we start to pump up. Blue line cross the orange line to the upside, pump. I mean, you can see it right here, right when it crosses, boom. A little one here, boom. A little one here, boom. And then here's the major cross right here. And as you can see, this one was right here, and we pumped all the way up to here. We come down to the bottom one more time here. We have a cross and then a double cross. I mean, it crossed and then it crossed back below and then crossed again right here. But you can see what happened. It crossed and then came down a little bit and then crossed here again. That was that falling wedge. And look at that.
A bunch of time. You would probably get further.
So, and now here we are, guys. We are currently right here. And as you can see, the blue line is getting ready to cross the orange line. This only happens once every 6 months, and every single time there's a big move to the upside on the price. It's hard to deny it when it's clear. Here's one back here in September of 2020, pump. Here's one right here in January of 2021, pump. Again and again and again. They're all little to some degree, like this one right here was this one right here. So now, so what's going to happen? Well, let's just look at the current price. I mean, this is happening after a big pullback as well, just like it did here. We had a giant, well, I would say here was from 109 down to the bottom. That was a 32% drop right before that cross. And here, currently where we're at right now, we had a 14% drop from the top to the bottom, 14%, and we're breaking out after bouncing on the one. Where did we bounce? Let's go back and look on the lower time frame. We actually went through the 112. We went all the way down. Went all the way down to 107. Now, do I think that that is as low as it's going to go? Not necessarily. I mean, if we're really being clear about everything, this is very important. That stochastic RSI that I'm talking about. I mean, that is a true indicator. But if we look at the upward trending resistance going all the way back to when we were at the bear market bottom, technically speaking, we are still a little bit of ways from it. And let me just go over here and look at this. This is what it actually looks like on US dollar index, Bitcoin on the US dollar index. If I really go out to the daily, you'll see it much clearer here. This is the upward trending support going all the way back to 15.5 at the bear market bottom. So we hit it. That was in January of 2023. That was in October of 2023. That was in August of 2024. This was in September of 2024. This, we wicked down to it here in March of 2025, hit it again here in April, and now we're coming close to it again. We are still in this apex. We're still above the upward trending support, and we're also bouncing. We bounced on 107, and we are coming back above the 112, which was the previous all-time high. Let me get rid of this. And I know there's a lot of lines here. Let me get rid of some of these other things. So this line right here is the upward trending resistance going all the way back to 2021. This line right here, I'm going to change the color just so we can really see what we're talking about here. And we hit it again here at 108, 109, 112. And then this is where we popped above it, hit 123, literally bounced on it for a moment. 123, wicked right down to it. You can see that wick right there. Boom. Bounced, lower highs, went through it, hit it again. Resistance, 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 right on that line. Went through it, retested, bounced, broke through, retested as resistance, and now we're below it. So we are now back below this overall resistance line going all the way back to 2021. But we're also above the upward trending support going all the way back to 2000 and all the way back to the bear market bottom at 15.5. But we're also technically still below the EMA ribbon on the daily, and we possibly are now flipping it back over. Remember what I said on the last few calls? We have to get above the 113.5 and hold on the daily. So this is the wick right here that we're in on the daily, and it is pumped above it. You can see a couple of these wicked up to it, came all the way back down, wicked up to it, came back down, wicked up to it, came back down. This one's above it now, and what is it doing? It's testing the 50-day moving average. It's coming right up to that, but we're underneath it. As you can see, we've been above it for quite some time, all the way back to April. We've been above it, above the MA ribbon, above the 50-day moving average. And then we bounced on it here. We went below it here, retested here and dropped, and we're coming back up to retest it here. So a couple important things to note is that if this EMA, if the stochastic RSI flips, crosses on the weekly, which every single time that it has, every single time that it has, there's been a big pump afterwards. Ah, come on now. I keep clicking the wrong one. Let me get rid of this.
Hey, Nico,
Yeah, go ahead.
what is what are those numbers that are attached to your looks like
All of these little numbers.
maybe is it the ribbon that's putting those on there? I just don't know what they are.
Yeah, hold on one sec. I don't know what I just clicked to put this on here. I don't want it. So, yeah, that's the EMA ribbon, I believe. Wait, where is it? There we go. This is the closing price from the previous candle. These numbers here you're talking about on the chart?
Yeah, just curious.
-5 from the opening price, +5, +12 from the opening price of that candle. It's not important. It's not something that I look at or care too much about. Normally it's not on there, so I must have clicked on something that made them pop up on there. So what I was trying to get to here is the stochastic RSI down here, guys, and on the weekly. On the daily, we are hitting a top. We are starting to curve over on the top, which is also right where it's coming up to hit the 50-day moving average. You can see that right there. Right where this is curving over on the daily. But on the weekly, we got a blue line getting ready to cross the orange line to the upside. And that doesn't mean we can't have some more little dips. But let me just show you the last couple times where the blue line crossed the orange line to the upside. Blue line. We still had a dip. Let me just show you real quick. Like here, blue line crossed the orange line to the upside, and we did have a huge pump. This would be equivalent to us pumping all the way back up to like 120, 124. And then it came all the way back down again. See, as you can see here, it did not go all the way to the top of the RSI. It didn't cross the dotted line at the top here at the 80. It went all the way back down again and then crossed again. And then that's when we had the big explosion out. So there are a couple times back here where it could cross right here like this and pump up and not get far because it's in a consolidation, giant flag, maybe still wanting to come down to this upward trending support. This is why I said we could be ready for a big move to the upside, because although this is happening and that is bullish, and you could technically just go long and wait, but the problem with that is that it could do something like this where it crosses the orange line up here and then comes down one more time and then crosses again. I mean, the orange line is underneath now, crosses back above it, comes back down, and then it crosses back again, while this just comes over and hits this upward trending support, continuing with the sideways consolidation here. Let me show you. To get to this line over here, because we are still a bit of ways away. Now, it doesn't have to hit that line to go up higher, but that is one of the fake out things that could happen. If it doesn't pump straight up from here, we could, because here's a time over here where we did consolidate. We hit an all-time high at 112 and we created this giant bullish flag here. But we didn't come all the way to this line, and we did break out and make a new high. So on this one here, it is possible that we don't come all the way to this line. We could just, we did bounce on this. We did go through the major support resistance. We come back up to it and we went through it. So we are technically back above it. And I would say we need to hold above 113, 113.5. Even though 112 is the support, we need a daily candle above the 113.5, I believe, in order to reverse the EMA ribbon from bearish back to bullish. But this weekly stochastic RSI cross down here could do the job, because that only happens twice a year, every 6 months. And every time it does, it's usually a big pump to the upside. And this could be the exact final time when we have this big pump to the upside. I wouldn't be surprised. Certainly can happen. And we have like what do we got? 4 months left. Let's go to the 12-month time frame. We have 3 months and 22 days left of this candle before the end of the year. And as I've been saying for a while, the fourth candle on the 12-month time frame has always been the top of each bull market cycle. Fourth candle, here's the bull market top back in 2013. 1, 2, 3, 4. That's the top. 1, 2, 3, 4. That was the top. 1, 2, 3, 4. That's the one we're in right now. So it's 1 year down, 3 years up. 1 year down, bear market, 3 years up. 1 year down, bear market, 1, 2, 3 years up. And we are in that fourth candle right now, but we have 3 months and 22 days left. So this candle could go all the way up to 170, 180. That would make sense, because that would technically be the top of the, let me go find it for you. I know I've showed you guys this before, but I know we have some new people on here. I just want you guys to really understand. That would be the 1.6 on the Fibonacci, which is a level that so far throughout history, Bitcoin's history, we have always hit in every bull market. Does that mean we're going to hit it this time? No, but we have always so far. That's this, where this red arrow is pointing, this blue line up here, the 1.6 on the fib, that would bring us to 178K for Bitcoin. These are the phases of a bull market. So phase 1 down here is the bottom of the bear market. That's phase 1. We break into phase 2. About a year. We break into phase 3, this red zone. We break into phase 4, and then sometimes we break into phase 5. The first 2 bull markets, we hit the top of phase 5, the 2.36 on the fib. That's past the 1.6. 2017, we hit it. 2013, we hit it. In 2021, we did not hit the 2.36, but we did hit the 1.6, which we hit every time so far. The reason why, I think, is because there was a lot of things happening. We had COVID. We had an economic meltdown. We had all kinds of chaos going on. People just weren't I don't think, as exuberant on crypto at the moment. They had other things to worry about. The economy was shutting down. We couldn't even go outside. It was ridiculous what was going on. And then on top of that, we had the FTX collapse, which was the biggest scam on a centralized exchange perpetrated on the crypto market. So all of that together could have been the reason why Bitcoin or crypto just came to a grinding halt here at the top of the 1.6. And then it double topped, and that was it, beginning of the bear market. We go down here, phase 1, phase 2, phase 3. We are now in phase 4. We're even higher than what this is showing. We're up here, somewhere up here in the one, we went up to 124, which is probably up here. And then we come back down. This chart is a little older. Back when we were probably just hitting this right here was 70, 73 right here, this red line. So when we broke out the 74.5, we went up to 112. We came down. We went up to 124. So somewhere up here. But we've always hit the 1.6. But we also always hit the 2.36 until last year. So is it possible this year we don't hit the 1.6? I will have to say that everything is possible. But we're already in this phase. We already got past the red line, which is the 1 on the fib. We're on our way to the 1.6. That would bring us to 178K. And we do have 3 months, almost 4 months left of this bull market. And so with that being said, With that being said, where would that bring us? It would bring us up to 170 right here, right where I was just talking about. That'll bring us to 178, which would be right about here. Interestingly enough, will be the top of this upward trending resistance line going all the way back to 2017, which is a different one than the one, this red one here, going back to 2021. So if this candle just continues up and hits that somewhere up here, wicks right up to that level, sometime in the next 3 months and 22 days. So this is what you guys want to look at. Every once in a while, look at your 12-month time frame on TradingView or on, I think, Phemex you can as well. Because once this candle closes, is it for sure guaranteed the top of the market, guaranteed that it's not going to go up any higher after this candle closes? No, because things can change. But just so far in the history of Bitcoin, it always has been, right? So what I'm going to do is, the trend is your friend till the end. I'm going to just assume that when this candle, 1, 2, 3, 4, this candle, 1, 2, 3, 4, this candle, 1, 2, 3, 4, this candle, the one that we're currently in, finishes and the next candle starts, which is in 3 months and 22 days, which would be December 31st of this year. Once this candle prints, the next one starts, whatever the top is of this one, I'm personally going to presume that is the top. Does it mean it is? No. I'm going to then do my own due diligence and research at that moment to see, is there any other circumstances? Is there any other catalyst? Is there anything else going on in the world that will change this? Or is something different happening? Are we having a collapse in the stock market? Are we having an economic meltdown? Are we going into a recession? Or are we having the boom, crypto boom of a lifetime? I'm looking for all of it. But just so you guys know, when this candle prints, historically, that was the top. Now, here's the thing. When this candle printed, it wasn't up here anymore. It was here. When this candle printed, it wasn't up here anymore at 73.8. It was down here at 46K when this candle finally printed. When this candle finally started, when this candle printed and this fifth candle started, this candle was down here at 46K. So if you would have shorted here at 46K, as soon as this next candle started, you still would have had a nice run all the way down to 15.5. If you would have shorted here when this candle ended at 13.9 back in 2017, you still would have had a nice run all the way down to 3,000. But the top of this candle was 20,666. It ended at 14. So you understand what I just want everybody to be clear. When I say in 3 months and 22 days, when this candle's done and the next candle starts, this candle may not be way up here. It could have went up there during that 3-month period, but if it comes back down and then prints down here somewhere, that means that this up here was the top. On the other hand, if it never goes up any higher than 124.5, which is the current top, the current high, and it just comes down, 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 down over the next 3 months, and then the next candle prints down here, then 124.5 was the top. But that's still a good indication to me that we're probably going into a bear market, and we'll probably be breaking the upward trending support at that point, which is this line right here, which would give me a good, even a better feeling about shorting at that point. I'm not going to worry about that right now. We got 3 months left, guys. I'm hoping we have another run up. I'm thinking that we will. I'm thinking that we will have some parabolic moves here coming up soon, which will allow us to catch another big move to the upside on Bitcoin before that happens, since we do have 3 months and 22 days left. And so far, we have not broken this upward trending support, and we have broken the top resistance line, which is also a positive. Yes, we did come back down below it, but just breaking it is testing the waters. That's like the first guy that ran the 4-minute mile. It was impossible before that to go for a mile in less than 4 minutes, and then someone did it, and then all of a sudden everybody started doing it, and then it was no big deal anymore.
Nico, can you go over that RSA chart that shows bearish divergence?
Yes. So that's the stochastic RSI. Let's go to the weekly, and then I'm going to add the regular RSI because we still have bearish divergence, regardless of everything I'm saying. Down here on the regular RSI. Now, the problem with bearish divergence is that in the stock market, we've had bearish divergence for years. Like it went on for years. So this is just the first time in the crypto market because the crypto market is not 100 years old like the stock market. But this is actually the second time that this has happened in the crypto market. The first time was back here in 2021, where we had a top right here, and then we had a lower high and a lower high and a lower high. But we had a high right here. We had a high, and then a higher high, and then a higher high. So we had a high, a lower high, a high, a higher high. That's bearish divergence. And then as soon as we come up right here, boom, we hit this again and we couldn't get through it. And here we did not make a higher high and we just fell. That was the beginning of the bear market. So usually, well, at least in crypto, bearish divergence is usually a sign of a top in the market. But here we had bearish divergence going all the way back to right here, this peak in March of 2024. And then we had a lower high and a lower high. And up here, when we hit it, that was the 73.8. That was when we came back up from the previous all-time high. We came all the way back up and hit it. And then we wicked through it to 73.8. We went into a nice bullish flag. And then we broke out and went all the way up to 108. But here, we did not make a higher high. So we had bearish divergence. So, and in this big drop all the way down from 108 all the way down to 74.5, which I was thinking we were going to come down and retest the previous all-time high right here at 73. I was thinking that it was possible that, and some of you might remember, I was feeling a little like this could be the top. This could have been the top right there at 109, 108, then double topped at 109, big drop all the way down. But I also knew that this was a falling wedge, and falling wedges are bullish. And we were coming down to retest this 112. And if we would have broken through that, I'm sorry, not the 112, the 73.8, the previous all-time high. If we would have broken through that, I was saying in the group that if we get down to 70 and get below 70, this could be the end of the bull market. And the reason why is because this was looking eerily familiar, like the last time where we double topped, we came down, and we did break out to try to make a new high, but we barely got out of this at all. And then we just dropped further, as you can see here. So on this one, we come up and we break out of this falling wedge. Look at this. We come all the way down to the floor. We bounce up and we come all the way up. We break out of the falling wedge, come all the way up to 112, but still a lower high. And then we fall a little bit and bounce on the moving average here, this yellow line. And then we bounce and we come up to 123. And then we fall down a little bit. This is the interesting part. Hold on, let me get rid of the, whoops. Yep. We fall down a little bit here. Which was what was really concerning to me is we hit the 123 right here. And you can see it. And then we fell down and came up and hit 124 right here, even higher. But look at that. That was even a lower low down here. It didn't even come up and hit that line. So to me, that's a double top. And then we have bearish divergence continuing. How long can it go? Well, in the stock market, it could go on for years, apparently. But in the crypto market, it's only happened one other time, and that was in the last bull market, and that was the sign of the beginning of the end. So here we are. Here's another problem. Bearish divergence. We are underneath the moving average on the weekly. Normally, that's bearish. Normally, if you look at the price, every time we're under this yellow line, it's a downward trending until we come back above it. We are below it. And we also fell below the overall upward trending resistance. We went above it, hit an all-time high at 124, which was a lower high down here on the RSI, and we fell back below immediately. As soon as we hit that 124, we fell back below the moving average, and we are far below it. Now, can we come back up? Yes. I mean, look what happens when we start to come back up above it. We pump, 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 and then we get above it. Pump, 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 come back down, touch it, pump. But this overall downward trending resistance is a little concerning, because if we just keep taking that all the way out like this, and then we draw a bottom floor on it, let's go back to about there, going all the way back to previous bull markets. Let me get rid of this.
So did you say the falling wedge is bullish or
Yes.
yeah, thank you.
Yeah, falling wedge is bullish. And we have another one happening right here that we are breaking out of. And it could do the same thing that this one did. And we could have the same thing happen down here where we pump all the way. This pumps all the way up to 150. Who knows? It could go to 130, 140, 150. It could go all the way up to 178. And this down here still could be way below, down here like this. But if this does break out of this and makes a higher high than this, it has to get above the 80 on the RSI, this one. First this one, but really this one. If that happens on the RSI, then yes, this time is definitely different, and we might be having a super cycle at that point where we do have serious ballistic moves to the upside. I mean, I think just getting back up to previous all-time high here at 124 and maybe breaking that to 126, 127, 130 would just bring us up to the top of this downward trending resistance line right here. If we break this line and we literally go higher up above this, up to the 80 again, then bearish divergence is no longer, and we do have the potential then to really get up to these numbers up here. But so there's some conflicting, detail here. Obviously, we have bearish divergence on the weekly, and weekly is very important. We also have on the stochastic RSI, a cross getting ready to happen. The blue line is getting ready to cross the orange line, which would be bullish for us. But is it a long-term bullish? Is it just going to bring us up from here to here one more time, continuing the bearish divergence, which would bring us up? Would bring a nice pump, probably up to 125, 126, maybe a new high. But the reason why I say 125, 126 is because how many times has this happened already? Let's just look here. 108, 109. 112, 123. 123, 124. I mean, we're going past the previous high, but not by much each one of these times. So it's like etching its way up. It's like, it's not some huge, real big breakout. This is a nice breakout of a falling wedge, and we are currently in one, technically right here, and we are breaking out. Let's go down to the lower time frame and look at it. I mean, that's a falling wedge. We are breaking out. Falling wedge, breakout. Here's the weird thing. We literally, this is a big M pattern after a double top. Both of those things I just said are bearish. Double top, M pattern. We did break to the downside, but we certainly didn't break down as far as I thought we would. I thought we'd at least come down to this line down here where I had my little circle. But I was wrong before. I was wrong back here when we were in this falling wedge. And I thought, I was certain we would come down to 73.8, this red line. Certain. And possibly even 68.8, 68.5, and at least to the 70K zone. At least. But what did it do? It wicked right down to 74.5, double bottom, and then that was it. It bounced out. And why is that weird to me? Because that was not the previous high. The previous high was 73.8, which was a little bit further away. But that was it. That's that's as close as it needed to get. So I'm not going to be that picky anymore. Here, we did come down and bounce on the 112. We broke below it. We dipped all the way down to 107. I was thinking we would at least come down to probably the 104 here. The reason why is because that was previous major resistance going all the way back. And it just so happens to be right where this falling wedge converges against the upward trending support. So here's another thing. So look at this. Imagine back in 2021, we hit 64.5. We come down, hit major support at 30, bounce, come all the way back up to 68, drop all the way back down, boom, 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 a little further, break out. We break out, but we never got higher than here. And let's just go look at it. That's what happened. Back here, and I go to the daily so it's not so all over the place. Very similar situation, guys. We have this big M. We have a double top. We were in a falling wedge. We were in a falling wedge. We broke out. Let's just move this. We broke out, retested, and went up, but only went up to 48K, and that was it. Fell. Could not hold. Could not make a higher high. So is the same thing going to happen this time? That I cannot answer. That's a crystal ball question. But what I will do is, you know, let's just look at the weekly stochastic RSI and look at what happened back here. Let's just look at it. We were definitely in bearish divergence on the RSI. This big pump that made a new all-time high here was lower here. And then when we came down and bounced on that support right here, we did break out. We broke out here and we pumped. And as you can see, when we broke out here, we were below the moving average and we broke above it. And all we pumped up to was the bottom of this downward trending resistance. We never got higher than that previous high. And that was the beginning of the bear market. If I go and add the stochastic RSI, this is what technical analysis is, guys. Looking at all these and trying to come up with a reason. What's going on here? So let's go back and look at this. Let's get rid of this for a second. When this happened back here, same thing. Blue line crossing the orange line to the upside. Only happens once every 6 months. Happened here, and we had a huge pump all the way up to a new all-time high. Comes back down, does it again, crosses, fubs around a little bit here, crosses, and then pumps. But where did it pump to? Only to here. It's happening right now. It's happening. Like I said, it happens every 6 months. So we go back to March. We go back before that to September of the previous year. And here we are about to do it again. The good news is every time it does happen, we do have a pump. The question is how high? How high is it going to be? Is this going to be the time where we break out to a new all-time high? It's obvious that after this fall right here, we have a breakout. It's green. We are crossing. That is happening. Those are two for sure things that are happening. It's just a little conflicting because we also have some bearish things going on, whereas we have the DMA ribbon. On the daily, we're still technically under it. We also have this upward trending support, which we came close to, but didn't quite get to it yet. And we have this big M, which we did break to the downside, but nowhere near as much as I thought we would. I would thought that would at least come down to here. Doesn't matter what I think. What matters is what's actually happening. And we are also retesting the 50-day moving average here, this blue purple line right here. I mean, we were above it for a long time, guys. Above it, above it, above it, also above the EMA ribbon. And then we get below the EMA ribbon flip flip bearish right here. Boom. Oh, below it. Also retesting the bottom of the 50-day moving average. We're below it, below it, below it. And now we're trying to come back above it. This green candle right here has to stay or has to open. The next candle has to open above this ribbon, this EMA ribbon, in order for it to flip bullish again. This is not a good example here because this one, we went to the bottom of the EMA ribbon and bounced right out. Went to the bottom, bounced out, went to the bottom, bounced out. This one, we went below it and retested underneath it, and then retested underneath it, and then retested underneath it. We're under it. When that happens, usually, not like this, went to the bottom, bounced out, went to the bottom, bounced out, went to the bottom, bounced out, went to the bottom, retested underneath, 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 underneath. Look at this. This is that example I was just giving you guys, or one of the examples is that we try to get out of it. Look at this long wick up to the 50-day moving average. This did happen on that last falling wedge back when we had a double top at 108, then 109. We flipped the EMA ribbon bearish. We got underneath it, bounced, bounced, bounced. We tried to get through it here, and we wicked right up to what? The 50-day moving average. Wicked right up to it. Bounced. Next candle, wicked through it, couldn't hold, fell all the way back down, and then bam, look at that. Holy smokes. Look at that. So is that what's in store? Maybe. What would that look like over here? I'm just trying to give you all the facts. We wick up the red can, we get higher, and then boom, and then boom. Come right back down to this level and bounce out. Bounce out. Could even bounce all the way up and then drop again, retest this line, and then go up to an all-time high. That could happen, and that would look just like this. Just like this. And we're still inside of the wedge. We're still inside of the overall apex here. So we could go up or down, up and down, up and down. So with that being said, my opinion is that if that stochastic RSI on the weekly crosses right here, the blue line needs to cross the orange line, which we have 4 days and 8 hours left on the weekly. We have until Sunday night at midnight. This blue line right here crosses the orange line, and both of them get above this dotted line at the 20 on the EMA. I mean, on the RSI. So this grayed out area is important. We're above it here, we're overbought. We're below it here, we're oversold. Once we get, and right now we're oversold, but we're turning, and you can see blue line is kinked up now, and it's looks like it's crossing the orange line right now. I mean, it's coming right to it. And these sharp points are much more accurate than these rounded, slow moving turns, right? Whenever we have a really sharp point, it bounces usually through it, through the orange line and right back up into this gray area. Sharp, boom, sharp, boom. But when we fuddle around down here and it's not sure what it's doing, that could still happen, like here where we had a sharp climb back up and then it cut down a little bit again before it finally went up. So I'm just a little concerned there. I want to see them both come above the dotted line, which is the 20 on the RSI. And I'm just, I'm warning you because this is starting to happen right here now. So it's something to keep an eye out on. And we are also breaking this downward trending, this downward falling wedge to the upside, which is bullish. That's positive.
Hey, Nico, have you looked at the average span on a sharp pop like that on the stochastic to see where that is, to give you an idea of if it were to do that in anticipation of when you may be looking for it to turn?
Well, I mean, we are right there. It's every 6 months and it's happening right now. This is it. I mean, if I go down and circle, if you look at all these circles down here, let me go back to the weekly. I mean, we have one happening right now, and all of these other times that I've circled this was when it happened before. And if I hold my mouse here, look at the dotted line going straight up. Right when that crossed, and both the blue line and the orange line get into this trade out area, it was a big move to the upside. Both of these crossed, the blue line and the orange line get into the grayed out area. Big move to the upside. We did have a little, you know, what happened here is it came back down to retest. So what did it retest? It retested this. Blue line right here, blue line across the orange line, broke out of this downward falling, you know, bullish flag, retested and then bounced out. So we could have a retest. And what that would look like is the blue line crosses the orange line to the upside. We pump up like we just did. We are out of the falling wedge. Let's go to a lower time frame so you can see what it would look like up close. We have this overall falling wedge situation. We get out of it and retest and then bounce. This might not even be as accurate as I could make it. I could probably even bring this if I really wanted to and just bring this to the tops of all of these. And maybe we're already bouncing out. Let's do it this way. But it still would need to retest. And actually, this makes more sense right here. So I would say come back down and retest this. Not only is it retesting the top of what used to be resistance, but also right there at that 112 again. Bounce. Perfect. Right where those two meet, that would be perfect bounce. And I would say we'd be off to the races there.
Yeah, I'm trying to figure out the best way to make it clear. At the bottom of the stochastic, on the ones where it's a sharper turn, not the ones that labor and zigzag, but the ones that it's a sharper turn from the bottom of that until it crosses over. Have you ever looked at the time
the
span
time
between
frame?
that? Yeah.
Yeah. The time frame is a week. So right here, it crossed on September 9th, 2024. That's where they crossed the orange line. And when they both got above the dotted line, it was the 16th. And as you notice, when you're on the weekly time zone and you move your mouse a little bit, it jumps from week to week to week to week. Each one of these candlesticks is a week. And so when I move to the next one, a whole week goes by on the weekly time frame. So right here, blue line crossed the orange line. And then 1 week later, they were both cutting, you know, touching the dotted line here. Blue line's getting ready to cross the orange line. So it would probably be September 15th, the end of this coming week. I'm sorry, the end of this week, beginning of next week. But that's what these indicators are for, guys. This is how you use them. I use the, you know, throughout the recent years, everybody who's been in here long enough knows that I only put really much weight into the weekly stochastic RSI and the weekly RSI. Those are the two heavy hitters. Let's go. And we can take a look at, also, we can take a look at the MACD. And you will see something interesting here on the weekly. We have a MACD. We have
What is that called? What's that called again?
MACD, MACD. It's moving average, but also shows it's the RSI, and the moving average also shows the money flow in and out. So we do have some money flowing out here, but when it started to flow out right here, that was on August 25th. And it's curving around here. We are now to September 8th. And it's already coming back around. You can see when this starts to come back around, the money is flowing back in. This looks like it might be a little blip like this, where it comes out for a minute and then comes back in, especially when we have that cross. See the cross happening here? Look down here. It turns from red to light red and then back into green when we pump up. Every time we have a cross right here on the RSI, the money flows back in and then boom, green flips. Right here, it was flowing out, which it was, as you can see up here, it was coming down from the top of this green here. It was way up here at 123, hit 124, came down, 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 down into the red zone here, but it looks like it's already coming back around on the price. So this could just be a little blip like this one. And then it just turns green again. But this, the regular stochastic RSI is probably more accurate than anything else. That's why I don't really entertain that much. I mean, it's helpful just to confirm what you're seeing on the RSI, but you don't really need it as much when you have the RSI.
Nico, you said that the stochastic or the RSI, you only use it for the weekly?
I mean, you can look at it like if I go to the daily and look at it right here, what's happening is that if you're trying to get a bigger picture of what's happening, then you definitely want to be on the higher time frames. But if I go and look at it here on the daily, you can see where it did cross at the bottom here above the orange line was the bottom, but it was also, we've already pumped all the way to the top. And as you can see, it's curving around. So you can do it on the daily and it's accurate to a degree, but when you're trying to get a bigger, broader picture of what might be getting ready to happen, it depends. Are you scalping? Are you getting ready? Are you preparing for this big move to the upside? Or you want to catch this pump up to, 115 and then maybe catch it down? Like when this line right here, blue line crosses over the orange line to the downside right here. Look what happened up here. We hit the top 123 and we came all the way down to retest at 112. And this came all the way to the bottom. And then it crossed again and pumped all the way up to 124. And that's kind of where we're at right now. It's crossing. It crossed 3 times here. Crossed here, crossed here, crossed here. A little less accurate. You don't know which one of these is the one. But once it got above the dotted line, that was the one that pumped up, which is right here. That's the one that pumped up. But on the weekly, it's just now crossing. All of that already happened, and it's just now really crossing. So to me, it's just what it's doing when you go to the higher time frame really is it's kind of like tuning in the radio station. You can hear the music, but it's a little staticky on the lower time frames. You can see what's probably happening on the hourly or the daily on the RSI, but it's not as clear. And it's still open for interpretation and it's still open for changes. Whereas when you see it happening on the weekly, it's more likely to happen. That makes sense.
What time frame do you usually do the EMA ribbon?
The daily EMA on the on TradingView. So you want that on the daily. And it looks like we're trying to flip it back to positive, but just a precaution there is that did happen back here too. When we flipped it bearish right here back in 2000 this was not that long ago, actually. This is in February of this year when we hit 108 and then 108 here and then 109 and we fell into this big falling wedge. This was not the end of the bull market by any means, but we flipped the EMA ribbon bearish and we tried to get back above it here. And all we did was wick up to the 50-day moving average, which is what we're doing right now. We flipped bearish here and we're wicking up to the 50-day moving average. So what this could be, instead of this being a falling wedge here, this whole thing could be like this one. We wick up to it and we fall further lower like this giant falling wedge here. where we came from 109 all the way down to 74.5. We did break out and then make a new high after touching this upward trending support. So that could still be in play, and it would look more like this. And that would be the falling wedge here. Let me get rid of some of this other stuff. Because if this didn't already, only reason this looks like such a good falling wedge is because it already happened and I'm drawing the lines. But if we were back here and none of this happened yet, I might be drawing this like this. I might be saying, oh, here's the falling wedge. It's this little falling wedge. Oh, we're breaking out. We're breaking out. Oh, but what are we doing? We're only coming up to the MA, and then it does this. And I'm like, oh, that falling wedge ain't done yet. This is the falling wedge. So just be careful with assuming that's just because of my drawing. Sometimes we have to change our drawings. Now, if I look at it this way and I do something very similar here, I come up to the previous high here as the resistance, and then because there was support here, and then that continued to be the support down here. I could bring this all the way over. I could bring it to here and say that was the resistance, resistance, resistance. We break through support. We come all the way up to the top here, and maybe this is the falling wedge. And we're just hitting the bottom this whole time. We're coming up to the top right now, and maybe we're going to fall down more, down to the real bottom, which is this upward trend line. I don't know yet. That's a crystal ball. Have yet to be seen. However, a couple of interesting things are happening. We flipped the EMA ribbon on the daily bearish. We are underneath it. We are pumping up through it right now to retest the 50-day moving average. We would need to hold above it on the daily. We would need to hold above this ribbon on the daily. Last time we flipped it bearish was here, back when this falling wedge happened in February. We flipped it bearish. We retested underneath it, couldn't get it back above it, and wicked up above it, just like we're doing right now. Imagine none of this happened yet. This is very similar to what we're doing right now. Wicked up above it and hit the 50-day moving average. The next candle opens and we hit it again, but we couldn't get above it. We couldn't hold above the EMA, the ribbon, and we just fell. So could that happen again? Yes. That's what I'm trying to say. This could just happen one more time. And I wouldn't be surprised because we do have some ways to go before we hit this upward trending support. We don't have to hit it. Like this time we didn't hit it. We came down to here and broke out and went to a higher high. We didn't come all the way to this line, but it's possible that we do first before we break out of this overall wedge that we're in. So when I give an analysis, I'm kind of giving you all possible scenarios, but the one factual thing that can change everything is this stochastic RSI cross down here, because that only happens every 6 months. And when it does, and the blue line crosses the orange line to the upside, and we get above this dotted line, it's usually a giant pump to the upside. No matter where you go and look on the weekly, the RSI crosses the orange line, and the blue line crosses the orange line and the dotted line here. Big pump to the upside. Back here, blue line crosses the dotted line and crosses the orange line. Big pump to the upside. Here, blue line crosses the orange line. Big pump to the upside. So that's positive. That's about to happen.
Nico, it always seems like there's a green candle once that happens, and maybe the next one after it is green. Is that something to look at or not really?
Yeah. I mean, that's basically what I'm saying, is that usually is an indication of a big move to the upside when the blue line crosses the orange line to the upside. Now, with the exception of a couple times like this, where the blue line crosses the orange line to the upside and then doesn't go up that high and then crosses back below it, crosses it again, doesn't go up that high and crosses back below it, doesn't go up that high, crosses again, comes back below it. But notice when it did this here, the first time it did pump up, but it came lower, and it did pump up and it came lower, and it did pump up and it came lower, and it finally did break to the upside and pump really high here. So if we are in a downward trending falling wedge or bull flag like this time, we do need to wait for a breakout. And we were up against the upward trending support as well. So on this last time when it retested right there, that was it. That's all it needed. And then it bounced out. Here, came all the way down, bounced on that line, broke out. As soon as the blue line crossed the orange line, breakout. Here, come down, blue lines are getting ready to cross the orange line. We didn't come all the way to this line yet. We didn't come all the way to this line yet, but we are above. We are technically right above the EMA ribbons. At the moment, it would need to hold above it right here on this candle, but we are now coming up against the 50-day moving average resistance, and on the lower time frame, we are at the top of the RSI. So on the daily, we generally don't get higher than this. Look at this. If I draw a line on the at the tops of all of these lines here and just bring it all the way over, we're kind of pushing it. So maybe we're pushing it right here at that 50-day moving average and also the downward trending. This isn't real yet because we need 2 touch points, but that could be the next touch point right where it's hitting that. And if this curves there and crosses the orange line back to the downside, we possibly will see this come back down and we either retest the 112 and then finally break out, or even further, like we did here. When we retested that, we fell much further, staying in this wedge, staying in the falling wedge all the way until we touch this line, which would be, for me, all the way until we get probably somewhere down here, somewhere between the 104K or all the way somewhere up here into the 108 again, because this could, if it does fall from there, it could do something like this, where it takes its time and then falls over here and hits it at 107. Again, all it's doing is retesting this one more time, but also where it meets this, and then we bounce out. That would make sense to me too. It would be a nice falling wedge. It would also give time for this to come above, everything for this to break out here. It would also just make more sense. It doesn't mean it can't just break to the upside right now, because I've seen that happen before. It did that in the same falling wedge that I'm talking about here, where we came up and hit that EMA on the daily. It did it here. It did what I'm saying here. It hit the 50-day moving average and fell, but it didn't come all the way down as low as I thought it would before breaking out. So it is possible that we do break to the downside and just hit the 107 again, and then break out without coming all the way down to the 104, without even hitting this line. That's possible. But for some reason, I think we need to hit this line again before we have a breakout to the new all-time high. We did it here, all-time high, hit the line, break out. All-time high, double top, hit the line, didn't hit the line, break out. Close to the line, might be hitting the line. The reason why this line's important, guys, is because that's the upward trending support going all the way back to the bear market bottom. And we have to stay above it in order for us to continue in the bull market, in order for us to continue up. Otherwise, if we break below this line and retest as resistance, that's bear market territory. And that will happen eventually, but I don't think it's going to happen yet. I think this line needs to go up further, maybe up to the 170. That would be nice. We have another big pump to the upside here. And then we come back down, fall through that line at 140 maybe, and then we're in bear market. We'll be shorting it here. Towards the end of the year. Any questions on that? You're welcome, Dave. You're welcome, Cheryl. Welcome. On the weekly RSI, are you looking for a 20 and a green candle? I noticed every time you circled the bottom RSI, the next candle or candles were green. Yes, I think I just clarified that. That was the whole point. of the weekly RSIs to show you that every time there is a cross on the blue line crossing the orange line on the weekly, that we have a big pump to the upside. It's getting ready to happen again. As far as the last call we were on, guys, I did go long on Ethereum and XRP live on the call. Those two are up right now. Let's look at these other ones before we wrap up this call. I got to end this call at 1:30, so I got 15 more minutes. And we also have the basics call today. Very important call, guys. So if you're new, make sure you get on the basics call. Oh, by the way, I wanted to say some of you were having issues with Phemex. I got an update from our contact over there. She says, "Good morning, Nico. Thanks for sending the list over. Me and my team have gone through it one by one and analyzed. Users under another KOL, which means another partner at Phemex. The term means key opinion leader. I am a KOL. So you guys if you didn't use my referral link that we give out on the webinars or when you joined Crypto Renegades, then you might already have went under someone else's. And that's why you're not getting that same benefit or privilege. That's one option. Please let them know that they need to sign up a new account with the Crypto Renegades link. Verification not required. Since they're tied to another KOL, they can't enjoy the Crypto Renegades perks, and we cannot take any action from our end. So you would need to basically open a new account using our link if you are using some other person's referral link, because they're not Crypto Renegades. Even if it's a member of our group, because they're not the KOL, they're not the one that has the agreement with Phemex to make sure you guys get cleared. You guys can refer people to Phemex using your own personal referral links, and you can get some benefit from that, like a referral bonus or something like that. But if you're a member of Crypto Renegades and you want VIP white glove access as a Crypto Renegade member, you need to use our official referral link. The other reason why that might happen is users, all the users under me, however, though, on that list are all good. They're already under Crypto Renegades and fully enjoy the perks, no action needed. Users without a reference link, no KOL, meaning these are under review. All of you that were on the list, but you already have a Phemex account, but they were not from another referral link. They were just regular. You went to Phemex and opened up your account. All of you guys are under review by the relevant team. For now, they're not under Crypto Renegades and don't have the perks. If all good after the review and approved for binding, we'll take the necessary actions to connect you all under the Crypto Renegades umbrella there.
How do we know if we're on the right one?
Bill sent me a list of everybody, and I sent them the list of all the Crypto Renegades UIDs, which is the user ID number. And they're going through it one at a time to see who is, everybody's going to be put under the Crypto Renegades umbrella unless you signed in under some other person like me, under some other partner with Phemex. And I don't know why there is a few people like that. There's a few people that may have opened their Phemex account by using some other referral link on some other person's YouTube channel or something like that. And they just already have their Phemex account, but they're under somebody else's, flag, so to speak. And they're not getting the no KYC, no VPN access like you get with us. So I guess a good question, a way to answer your question, James, if that was you, is that, do you have any problems with Phemex?
Yeah, I had to do the hang on. I had to do the what do you call it, the VPN thing. I went in on my phone had it, so I couldn't go on my computer to do it. So I went on my phone because my phone has it. And that's how I signed in. But I had to do the KY.
How long ago did you do all this?
It was not even a month. I'm really new.
Oh, okay.
And it took me like a week from when I first started, when I watched your main video to invite people in. It took me like a week to get in because my transferring my money got all screwed up.
Yeah. Mom, if you want to send me your UID number, which is your
Okay.
ID,
Yeah.
your ID number up here. UID.
So I don't even know what I'm missing. That's funny.
You're just missing, VIP white glove treatment with no restrictions, with no KYC, with no VPN required.
Okay. So
And they put you under, once you're flagged as a Crypto Renegades member, you do get extra perks and benefits because you also get email, you also get training from Phemex, separate from our training. You get training from Phemex that is not available to the average person, teaching you how to use Phemex, which is separate from our personal coaching and training. And also, if you ever have any problems with Phemex, they take care of you faster and quicker.
Okay. So then, so I'm gonna send you my UI, and then you'll pass that on.
Yeah, if you want to put it right in the chat right now on the Zoom chat
Okay.
to me,
Okay.
I'll give it to him right now.
See if I can do that.
So Nico, it's Corinne. I was also texting you. If you were already KYC'd, is it something they can take back or no?
I don't think so. I don't know.
Probably just
I'm
create a new
KYC.
account.
Say that again, Bill.
I would probably just create a new account. I am also KYC. Phemex doesn't report, so
Yeah, I'm KYC'd and I don't care.
Mine is a pain because every time I go to Coinbase, I have to turn off my VPN.
Yeah.
As
So
well as my bank. So
here's try this, Karine. Turn off your VPN and then log back into Phemex.
I did. It didn't let me. It says you're not logging in properly.
I think you're from Canada, aren't you?
Yeah.
Yeah, that's why. There's
Were you do you know, Bill, if she was on the list you sent me?
I don't know for sure, but I do know if you're in Canada, certain areas of Canada, they have to use a VPN.
Karine,
But
I'm sorry, I don't need to show this in front of everybody, but this is just everybody's IDs. Let me just look and see if you're on this list, Karine. You're not. If you want to send me your UID right now, I will have them switch you over to
what is the link? I'll drop the link in the chat.
Crypto Renegades, and that way you don't have to.
Great.
Please add me to the Renegades list on. All right. Laura, who said that? Laura Rock. Okay, I get it. I got to know your name too.
Yeah, my name is Thomas LaRock.
Oh, okay.
Sorry, my ID got messed up here on Zoom, but I'll type it in here.
No problem. I think I don't even think they need your name. They probably just need your ID number.
Folks asking, am I on the list? We can't check. This is something that you needed to have followed our link or just send us the UID.
Can we send you our UID now if we know we're not on the list?
Send it to me in the DMs, guys. It's hard to get out of the Zoom chat.
Yeah, send it to Bill, and Bill will put you on the master list, and I upload that to them, and they can go in and make sure who everybody is categorized under Crypto Renegades, and then you won't have that problem anymore. Karine, do that as well. We'll get you guys straightened out one way or another. So I promise. Unfortunately, if you didn't join, listen, most of you are, if you've come into this program in the last 4 or 5 months, you should have used our referral link. If you did, then you shouldn't be having any problems. But if you didn't, that's why you're having problems. And we'll be happy to get that straightened out for you. But we do need your IUD so we can go back in there and let them know, and they'll go and clear you. But it is a fixable thing. Don't worry about it. And if you already are using a VPN, I understand that is a pain in the ass you got to remember not to go to Coinbase with your VPN on, because you will get blocked on Coinbase.
My bank blocked me when I wanted to do a transfer. They said, are you using a VPN? And I guess by mistake it had been left on. I didn't know the bank is going to flag it as well.
Yeah, because those accounts require KYC. They need to know who you are in order to let you transfer money. That's for your protection, right? KYC is not a bad thing, guys. It just most centralized exchanges need to know that it's you transferring the money, and you want them to do that because you don't want anybody to be able to get access to your account, right? So they're just verifying it's you. But if you try to block who you are, your identity, and you go and log into your account, they can't see that it's you. They're going to, for your security and protection, they're going to block it because they think a threat is happening. They think someone's hacking you. So it's a good thing. Don't be mad at them for doing that. They're protecting you against yourself. They just don't know it's you. Right? And so you definitely need to remember to turn your VPN off if you're going to go to a centralized exchange on the same IP from the same IP address that you're using your VPN. And I know it's a pain in the neck. Here's my suggestion. Maybe have your VPN on Phemex on Google Chrome. Then maybe go to Coinbase on Internet Explorer or some other browser so that it's not flagging it as the same browser. I don't know if that will help or not. Might be the same IP address. So you might just want to turn your VPN on. But while you're, until we get you switched over to where you don't need a VPN, and you get green lighted in Phemex, just try to remember to turn your VPN on if you go to Phemex if you go to Coinbase or any of these other centralized exchanges. All right, Steve, if you don't mind, let's see, Steve, I'll let you know if you're on there or not. It was a big list.
And it's getting bigger. Hey guys, when you send me your UID code, a lot of you are not using your real name. It might be helpful to let me know who you are or the email address you joined the group with. That way, when I add it, they can find you easier.
Yeah.
Bill, is it better to catch you on Discord or
Yeah, send it to me in the DMs on Discord.
Okay.
Adding them as I go. There's a bunch of them in the Zoom chat, and I'm trying to get them all done.
Yeah, it's too cumbersome for me to do it one at a time, and it's better. They always ask me for a list. They don't want me to just give them one at a time. But I mean, if the list is all solved and there's only one or two stragglers that weren't on the list, then I'll just send them over. I already just sent over a couple that you guys put in the chat, but it would be easier for you to just, or Bill to just add it to the list, and then they'll have that list, and they'll check off who is whitelisted and who's not. If you did, and you did open up your Phemex account using some other referral link from some other, influencer on YouTube or something like that, then you might be under a different, what they call KOL, which is a term for, I forgot what I said. I don't even remember the.
There's only a few of them. There's only a few Phemex ones. Like TTC only ever mentioned it once. And here's another problem, folks. If you've already sent me this, you're duplicate. Don't send it to me again. I don't want to do the work twice. Many of you have just sent me duplicates of this. If you've already sent it once, don't send it again.
Yeah, their list is in their hands. They are going through it, and she will let me know probably by the end of today. They are whitelisting everybody on the list, and key opinion leaders. So that, yeah, like Bill said, there's only a few of them out there, but it is possible that you click someone else's link and opened your account, maybe they offered some kind of bonus or incentive, and that's fine. I don't care that you use someone else's, but you're not going to be on the crypto. You're not going. We are the only ones out of all of them that allow you to bypass the KYC and the VPN. And they are in the process, by the way, guys, just so you know, they are in the process of jumping through all the legal hoops to be what's the word? Unrestricted in these countries, in the major countries. But it is a big process. They're doing it in Europe right now, and it'll probably be cleared in the US soon. But in the meantime, we still can use them, and we just have to jump through a few hoops. No, Jason, you'll just have two accounts, and then you could transfer from one to the other. If you open a new account, you just got to probably use a different email address. Not a big deal. We'll get you guys straightened out. Well, we just need to know in order to send it over to them, and they're usually on it very quickly. All right, guys, we are at 1:30. In 30 minutes, we got the onboarding. We do have what appears to be Bitcoin coming back down. It did go up to almost 114. Yeah, it did. It actually hit 114,250. And it does look like it is pulling back, and it probably is going to retest like I have here. Probably is. And it probably will, right where this blue line meets this red line, which is right again at the 112. Or maybe it'll just stay above the 113.5, because remember I told you, in order to flip the EMA, it needs to stay above the 113.5. Maybe it will. Look at that. That is that right there. Boom.
Since I have a laptop, would you still recommend me getting a mouse? Because you guys do this so fast, and when I try to do it on my laptop, it sucks.
Oh
It's
yeah,
gonna
I have a
change
mouse.
your life.
I have a mouse for my laptop. I can't stand those little finger pads. That's just me personally. I mean, if you're good at it, if you like it, do it. But I definitely have a wireless mouse on my laptop upstairs. I'm not on a laptop right now. I'm on a big desktop PC.
Yeah, get a
I-
wheel, man. That'll change your life. A mouse.
Oh yeah, the wheel allows
Thank
you to
you.
do this on your mouse on your laptop. You can
Yeah,
scrunch it. You can't do that with your finger.
Yeah, it sucks. I'm trying to expand stuff, and I'm trying to do this my two fingers on here. It's like,
Yeah,
then I'll blow the whole thing up, or I'm looking at like one day my whole screen or something. It's great.
yeah, I feel you, man.
Thank-
One time I went on vacation and I took my laptop with me and I forgot my mouse, and it was a pain in the ass.
Okay, thank you.
Yeah.
Hey, Nico,
Yes.
you got a minute to go over that Ethereum setup you talked about on Monday?
Yeah, so Ethereum Ethereum and Bitcoin, Ethereum and XRP are still kind of correlating with Bitcoin, but as you can see, Ethereum did pump up really high and it is pulling back just like Bitcoin is. And where is it pulling back to? Possibly this upward trending support. Ernesto, please mute yourself out, please.
I got him.
Hold on 1 second. So we have this
There's-
upward trending.
I'm sorry, Nico. There's so many people. You guys have dropped so many in the Zoom chat. Please take it to the DMs. Please. I'm going through. There's just too many. I'm gonna have to jump on the other call before I get finished.
Yeah, send those UIDs to Bill in the Discord chat. Thank you, Bill. Appreciate it. So XRP did dip below this line and pump back above it. I'm sorry, Ethereum, not XRP. And it is coming down to retest right now. So if we fall below that, let me just go and look at this real quick. Is this where I want it to be? I mean, it's possible we do, and it comes back down to the 42.33 here, which is this very bottom support level going all the way back.
That's close to our stop loss. I think we're at 42.09, correct?
Yeah, it is. And I should have moved mine into profit because we were up. I was up a few hundred, $500 right here while we were talking here, and it just didn't, it's kind of coming back down. But I think that I'm going to hold these longs. I'm willing to lose this profit, which is not much at this point. I think when we started this call, it was like $400 or $500, and now it's 126. But it's not much. I'm willing to lose it because I think that if that cross happens on the weekly stochastic RSI for Bitcoin, and Bitcoin does get a nice pump to the upside, all of these are going to pump. So I'm going to stay in these, and then I'm going to enter Bitcoin. Let's go look at XRP. XRP already had its big breakout of the downward trending falling wedge, but it's still having a hard time getting through this resistance and support level right here. But it is up inside that channel right now. So once we get a breakout,
Will you send some signals for the Bitcoin?
yes. As soon as I enter long on Bitcoin, I will definitely put that signal in. I'm still in. I mean, I already have these open, and we could be coming down to another good entry point if you didn't get in on these. So let me
I I did get on the Ethereum. I didn't do the XRP.
I'll just copy. These are the open positions that I'm in right now.
So you're putting those under your trades on Discord?
Yeah, on the Signal channel.
So you think there's strong support at 290 for XRP and then for the big move, and probably not going to get any buying opportunities below 290?
Say that one more time. I'm sorry. I was typing and I heard part of what you said, but I want to make sure I answer it correctly.
So it's going in that little trend or that little gap there, that little slip between $3 and 295, or what do you
Yeah.
think it'll go down to the 290, and that really would be the bottom, the last buying opportunity before it really takes off parabolic?
I mean, it's in an upward trending, it has some upward trending support here, so it's hitting the ceiling here. So if I look at it that way, we are in what looks like a apex right here. If you just look at the yellow, we got this upward trending and then the ceiling. So I'm waiting for breakout of that. I'm already in long, but if we break out above here, then that's a breakout to the upside on XRP. And
I was just trying to figure out what entry to limit order to add contract to my existing positions at the rate.
yeah, I would say somewhere up here in the $3 range. $3.05 maybe.
Oh, I was thinking more like 292 or something. Pick them up a little lower, but
Well, you can, but it hasn't broke out yet to the upside, so it could still fall below and come down lower. If it breaks this upward trending, apex to the downside, then we could come back down and retest these areas if Bitcoin drops or Bitcoin doesn't do what we want it to do.
okay.
Nico, a week or so ago, you said to load up on XRP. At this stage, if we're looking for an entry, just maybe wait for the pullback.
If you're buying and holding for the long term, I wouldn't wait.
Just buy as is.
Yep.
Okay.
Anything in this price range is probably a steal. Yeah, don't try to time a bottom. If you could go back and buy a Bitcoin at $13, I'm sure you would. That's what buying XRP right now under $3 is like, in my opinion. Solana also pumping, upward trending, looking bullish, but we are in a rising wedge and we are hitting the top of the resistance, which could mean we're coming back down first. So if you're going to look at Solana, wait for it to hit the bottom of this upward rising wedge and make sure it doesn't break through it. And let's look at a little higher time frame here, because we are now coming up right at this resistance right here. So we had resistance, 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 support, 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 resistance. And that is exactly where we're hitting right now. If it breaks through that to the upside, it just wicked up to the top of this. If it can hold above that line right there and bounce as support, then that's bullish on Solana. And I mean, look how high it climbed up from. Also, nice W.
So what does a upward trending wedge mean?
Well, it's bearish, but it could still trend up for a while before it breaks to the downside, but they usually break to the downside.
Nico, where's the yellow line that it's bouncing on?
Right
Or
here,
fixing to break through? Yes, sir.
$2.22. And you can see the resistance over here back in January right there, and the support and the resistance. But if we break above this, possibly looking at coming back up to this level. And isn't that interesting? That would be $293, $294 for Solana, and that would bring us right to, well, previous high. Easily. So if you're buying and hodling, holding, waiting for, future, 2 years, 3 years, 5 years down the road, big money, you want to load up on XRP. I would say Solana as well. I would say XLM. I would say, here's XLM. Let's look at XLM. I mean, see anything similar happening over here? Giant bullish flag. Possible breakout to the upside. New all-time high up here at 67 cents, more beyond. That's potentially what can happen there. But this bull flag is this high right here is lower than this high. So we do have a little problem there. So these are the situations where a bull flag could break to the downside, but we will see. I mean, it is a falling wedge. It is a bull flag. It is bullish. And this is a crypto ISO 20022 coin, XLM. It's one you want to have a lot of it. And right now it's only 38 cents. If XRP goes to $7, $8, $9, $10, XLM will be a couple bucks. It'll be probably right in line with where XRP is right now. That would be a 10x. If it goes to $3.80, that would be a 10x from where it's at right now. I personally just have a lot of it just in case. I'm not trading it over here so much. I'm basically just trading Bitcoin futures contracts and XRP and, Ethereum. But in my holding accounts, I do accumulate a lot of this stuff because there comes a time when, you just have enough of it that if it does what the highest potential is, you'll be set for life. And you don't really need to, okay, do I need 75 million or will 65 million do me? Okay. Will I be okay with $65 million or do I really want to push it and get 75? Do I need another 1,000 tokens to get me to 75 million? Is that going to change my life much? No. Probably not. Pretty sure everybody I know who has over $20 million says that every million they made over that didn't change anything. But then again, you might just want $100 million. I don't know. It's up to you. All right, guys, I got to run. It's 1:43. Any other questions before we wrap it up? Yeah, you could buy a bigger boat, Calvin. But I think if you got 65 million or 75 million, you can probably afford the same boat.
Thank you, Nico. Really appreciate your live views.
You're welcome, dear. Thank you. Appreciate you. Jen, would you recommend opening sub accounts and using liquidation price as stop losses on XRP, Solana, XLM? As entries? Oh, stop losses. Interesting. I do recommend having sub accounts, and I do recommend using them for different things. I mean, I have a scalping account and I have a swing trading account, more of a long-term hold account, and one just holding, just sitting there. But I probably have a dozen of them sitting there without anything happening in them. But it just depends on what you're using them for. But if you want to do swing trades and you want to also go long, like right now, let's say you want to go long on Bitcoin because you just think that this stochastic RSI cross is going to cause a pump up to 124, 125. You can just go long in one account with a smaller amount. Doesn't have to be crazy leverage or anything. But in your other ones, you're ready to also scalp or short it if it falls back below the daily EMA ribbon. You know, you can have multiple strategies going on with multiple sub accounts. But don't stress yourself out, you know, trying to manage too many different things if you don't really grasp it or understand what you're doing. I'd rather you guys not be chewing your nails off. There's something that happens when you start trading is you first get excited, you realize that money never sleeps and you could be up all night until the sun comes up making as much money as you possibly can. You'll go through that phase, some of you, or you literally are up until the sun comes up. And then you'll realize I need sleep and this is not good for my health to stay up all night. And then you'll get out of your trades at a decent hour and you'll just wake up tomorrow realizing that, hey, another day, another dollar, and the market just keeps moving. And it doesn't matter whether I was in a trade or not. There's always going to be another trade set up. You'll go through that phase. And then you'll go to the phase, oh shit, I could have multiple trades. And then that's why you see a lot of these people in our wins wall posting multiple trades simultaneously with a dozen trades that they're in all at the same time. And then eventually you'll become full circle again where you're just trading one maybe. And, you know, because it's easier to manage. Like for me, I basically focus on Bitcoin futures contracts because I'm trying to accumulate more of it. But I'm also waiting. I'm okay to sit on my hands for days or a week before a major move happens. And when that move happens, I'll make just as much as I would if I was up all night trading, scalping multiple trades. So, you know, it's yeah. I guess I don't know if it's just what wisdom. The older you get, or the more you do this, the more you realize you don't need all the shit you think you need, or you don't need to stress yourself out on a million trades all the time. But or you just get to that point where you're calm in your mind. You realize, okay, listen, if you miss a bus, if you miss a trade, if you miss something, a lot of you think it's the end of the world. A lot of you are like, oh my God, I missed that big move. So what? Tomorrow there'll be another one. It literally happens almost every day. 1 to 5% moves in the market, at least every week. So I wouldn't stress too much about missing a trade, taking some time off, taking a day off, going on a break, coming back to your computer refreshed. Don't just constantly trade all day, every day until the sun comes up. You will burn out. You will give money back. You will have great trades. You will make a lot of money, but you will give a lot of it back from over trading. So my advice is go ahead, do all that, touch the stove, get burnt. Sometimes you have to in order to realize why you shouldn't have touched the stove. I can tell you all day long what to do or what not to do, but sometimes you just got to do it to learn. But Gen 50X, well, I mean, just remember, just make sure you use a stop loss. Doesn't really matter if you're at 50X or 20X or 75X if you're using proper risk management.
Hey, Nico, when you're going into a bear market, I know you're going to be trading as it's going down as well. But let's say you have a large amount of Bitcoin or XRP or whatever, and it's dropping like a rock. Do you ever take any of that you're not using to trade with and convert to USD and then purchase it back when it's at a lower price?
Well, not if I'm in a short and I'm winning and it's going down and I'm shorting, I am trading on a Bitcoin margin. So I'm actually accumulating more Bitcoin on the way down. So I would not sell that to buy back more because I'm already buying more at that lower price as the price is going down.
Yeah, I understand that's what you're trading with, but you're not trading with all of your Bitcoin at one time. That's what I'm saying. The stuff that you're just holding and you're not actually trading with at the time.
Right. So selling it to buy back, selling it at the lower price to buy back at a lower price doesn't make sense. You're talking about selling it now at the higher price, and then when it does go lower, buy back?
Yeah, so at the end of the bull market, when it's when everything's turning bear,
you can do that if you don't know how to trade and you don't know how to short, then what you do is you take profit at the top and you wait for the bear market bottom and then you buy back a lot more. That's definitely a strategy, but it's very difficult to time the tops and the bottoms to know exactly when to do that. But what I would prefer to do is if I know that the top is in, is to short Bitcoin and accumulate a couple Bitcoins on the way down. So when it does get to the bear market bottom, that's when I'm closing that trade out and I'm buying it at the lowest price. So if you understand how a short works, is that if I go short now at 110,000, let's just say, and Bitcoin drops all the way to 70K, I'll just show you real quick before we wrap this up. Let's just say, let me go back to Bitcoin. Let's just say I were to short. Let's just say this was the top 114, 113, wherever we're at right now. And Bitcoin drops from here and I short it and we're going to the bear market, right? We go all the way down to 70K. I don't know where it's going to be, but it could be lower. Let's say 65K. That's a 42% drop to the downside. So if I had one whole Bitcoin, let's just use easy numbers, one whole Bitcoin, which would be 113,000 when I went short here at 10x leverage, maybe I would be 20 or 30 because I think it's the top, but let's just say 10x leverage, one whole Bitcoin, which is 113,000. Let's just get the calculator out.
I have a question. So what if, I mean, this is hypothetical because I don't even have any Bitcoin, but if let's say you had a couple Bitcoin and you had those, you have them in your spot or whatever. So if you got those and you got your 2 Bitcoins and you put them in on a short and ran them all the way to the bottom, that would be a wise thing to do, wouldn't it?
Well, if in a perfect world, yeah, if you knew if that was going to happen, that's the example I'm giving here. So I have one whole Bitcoin, and let's say I go short here with one whole Bitcoin at risk as my margin, and it goes down 42%. Now, the value of Bitcoin dropped 42%. So my one whole Bitcoin is now only going to be, if I was just sitting on it in Coinbase, my $113,000 Bitcoin would now only be worth 65 grand down here. But because I'm shorting it, I'm going to make $47,000 worth of Bitcoin on the way down. That's with no leverage. But if I was at 10x leverage, I would have just turned my one Bitcoin into 474,000. And if I close that trade down here at 65 grand, that's 474K divided by 65K equals, I just turned my one Bitcoin into 7.3. By shorting here and closing it out here at 10x leverage.
I think the original person who was asking the question is in regards to you're only using 5% or 10%, average when you're doing trades instead of just doing the one Bitcoin. Maybe you have 100 of them, so you gain on that one Bitcoin, but the other 99 are losing. I think that was what he's talking about. What do you do with the rest of it?
So if you have a Bitcoin sitting over in Coinbase and you have a Bitcoin over here, but you don't want to risk the whole thing on the short, let's say you go short with half of your Bitcoin, or let's just say, 20%. So let's just do the math real quick. So you got one whole Bitcoin. Let's just say, I'm only doing this for easy numbers. It could be whatever amount you have. You could have $10,000 worth. Let's just say all you have is, let's say you have $10,000 and you want to go short on Bitcoin. Nico says this is the top, we're going short. And I'm not talking about right now. I'm just talking about when we get to the top. Bitcoin is $113,000, but you only have 10,000 of it that you're going to risk on this trade. And Bitcoin drops down to 65K, which is 42%. So you have a $10,000 margin. That's what you're risking times 42%. You just made $4,200 on the way down. But Bitcoin dropped from $113,000 down to 65,000. But you're in this short with $10,000 worth of Bitcoin. So you've just earned $4,200 more Bitcoin, but the value has gone down 42%. But you're also at, let's say, 20x leverage. So you just turned your $10,000 worth of Bitcoin into $84,000 worth of Bitcoin down here, which is up here. You had 10% of a Bitcoin. You had $10,000 worth, and a Bitcoin was 110,000, let's just say. You had 9% of a Bitcoin. And down here, Bitcoin is now $65,000 and you have $84,000 worth. So now you have over a Bitcoin. You have 1.2 Bitcoin. Does that make sense? Is that a better explanation? But then what? Bear market bottom. Oh shit, Nico says it's the bottom. We're going long. Then you take now you got $84,000 with a Bitcoin. I think, plus the 10,000 you just started with, so 94,000. Let's just say you go along with 50 grand down here. 50,000 worth of Bitcoin and into the next bull market. And Bitcoin goes up to 700,000. I don't know where it's going to go. It can go up to 1 million, right? But let's say it does. Let's say it goes from that 65K I was just talking about right here, all the way up to, in the next bull market, shit, keep doing that. And let's say you ride that thing all the way up. In fact, if you could get in at the bear market bottom, guys, I would not touch this trade. I would not be shorting, getting out, scalping, anything. I would just stay in this trade. And let's say Bitcoin goes up to $1 million in the next bull market. Right there. That's 1,437%. You got 50 grand times 1,000. Whoops. 1,437%. You just turned your 50,000 to 718,000 with no leverage. Why would you have no leverage? You wouldn't, because this is a bear market bottom. So you're going along with, let's say, 20x. You just made, whoops, shit, sorry. 50,000, let's do this one more time, times 1,437% equals 718,000 times 20x leverage. You just turn your 50 grand into $14 million worth of Bitcoin. Now, Bitcoin is $1 million at this point. So now you have 14 of them. Now, if you want to convert some to US dollars or whatever, you could, but I still wouldn't. At this point, I'd be borrowing against it. All right, guys, it is 1:57. I'm on a little bit longer than people are texting me and calling me, trying to wonder where if I'm going to come on a call, and I told them I'll be right there. So, yeah. But anyway, that's exciting. That's the potential. And if you only, I mean, you could just plug in any numbers that you actually are working with, not just my imaginary numbers that I throw out there, and see what that would do for you financially. But you guys, most of you joined in the middle of a bull market. Most of you joined closer to the top of this bull market. So we're getting ready to go into a bear market. We will go into a bear market at the end of this year. And we will go into another bull market at the end of that bear market. So there are several opportunities to get a top and a bottom. But a lot of money can be made in the middle as well, scalping. So that's why if you are able to get the bottom and go long in one of your accounts, then maybe in a sub account, just so you're not sitting on your ass and sitting on your hands for a whole 2 years, 3 years, waiting for the next bull market top, you can at least trade and also scalp and make more money on the sides and maybe accumulate other cryptos, but just leave that one trade going for the whole bull market. That would be awesome. That would be the ideal trade. I'd rather trade once and make $10 million than be trading all day in and 10 times a day every day. Me personally. But anyway, guys, if you have any other questions, just ask it in the main chat in Discord. I got to get off right now. It's 2:00. Get on the basics call. If you have any further questions, basic kind of questions, get on with Bill. He's starting that right now. He posted it in the Zoom. He posted the link in the Discord group in the main chat and in the announcements channel. And also, I'll be going live again tomorrow night for the public masterclass, and I'll be trading live again. So if you guys want to get on that, let me know. There will be a link shared in the group or also in the free Facebook group as well. So you guys are welcome to come on that. If any of you want to give a testimonial, or if you have something good you want to say, Jared made everybody cry the last time he gave a testimony. Appreciate you, Jared. It was an awesome testimony. But anybody, if you have anything good to say or want to jump out on the live call tomorrow, feel free to send me a message. Let me know, and we'll call on you. Other than that, have a great rest of your week, guys. I'll see you on Friday if not, but I'll be on tomorrow night if you want to get on there. All right, guys, have a great rest of your day. I'll post any signals, anything that I